Hello, I am going to double check if I am fully alive here. So you're going to see my StreamYard setup. It looks like I am recording and I have my broadcast. So this is me. I'm going to be going through my chart reading process. I'm using Yahoo Finance, which is the best free resource for chart reading. And I will be showing you how to search up different stocks, and I will be taking stock suggestions on Discord. So now I need to go into my Discord and let everybody know that, hey, we're live. All right, so I need to take my YouTube link and send this off, blast it out. How do I share? Oh boy, I'm streaming to myself. All right, I'm going to share this. Copy. Oh boy, I'm streaming to myself. All right, there we go. And now I can put this up on Discord. Sorry and apologies here. This is my first time doing this live, and now we are live. All right. At everyone. We are live. All right, and then I need to go over to Patreon and get this set up. Let people know that we are live for real. Sorry, I should have all of this set up beforehand, but I wasn't exactly sure how to use StreamYard, which is the live streaming capabilities that I am using right now. So I'm going to make a new post, just a quick link to let everyone know that I'm live, and then we will get started. All right, link. Post that up. Yeah, there we go. Chart readings, finding stocks. I don't want to click my own link. Then I'll be streaming to myself again. All right. Post title retired. We are live. Out. All right. I'm not going to stop sharing my window. Let me just publish this. All right. Out. Oh. Perfect. All right. Here we go. So I am over here on my phone to make sure that I get the live chats on YouTube, as well as all of my Discord, which I am covering here on my desktop. So if you want to open up into this live chat and ask me a question, feel free. I will covering here on my desktop. All right, no worries. Take my time. Thank you, Plaza Oasis. Give some more long term. All right, so this is something that I really wanted to go through today, is finding long term. So especially right now when there are a lot of good deals going into the stock market, we want to look for long term holds. So the best place to find long term holds is in ETFs. So we have a Canadian ETF. Let's see, we've got Buzz and ARK, which are on the top of the charts right now, but that's because of interest, not because of viability. So let's see, SPY is an ETF. Let's see, let's go, just to take a look at it, we'll go into energy ETF, just search it right here. All right, iShares Global Energy ETF right here, Canadian stock, I believe, let's see, chart. No, it's on the NASDAQ. So let's make sure we get a Canadian ETF. So let's go with Vanguard. Let's see. See, it's going with Vanguard right away. Energy. Ozo. Healthcare ETF. So let's just search ETF and find one that we like. ETF, ARK, private. So let's go with ProShares. Let's just see where this rabbit hole takes us. So this is a short-term futures ETF. So there's no chart comparison for today, but we can go into their holdings. So what kind of companies are being held? We can go in here and go, it's a real estate. Oh, there is nothing but stocks here with no real information. So this is not one that's going to be very helpful. So let's go with REITs. A lot of good Canadian REITs out here. So let's go with REIT, ALPS REIT ETF. So let's go into their holdings. It's all REITs. Where are they? Don't even have. It's an ETF. This is curious. I was looking at, what about BTCC? I would not trust BTCC right now because it seems like it should go up and up like Bitcoin. But right now, there's a lot of people day trading it because BTCC is a stock. It does not necessarily follow the value of BTCC. Regardless of the value of Bitcoin going up 10%, the value of BTCC could go up 20% or could go down simply because there are enough people selling BTCC in order to make sure that they do not lose their profits when Bitcoin crashes. So BTCC may be a safe investment, but it's going to be just as volatile as Bitcoin. The only reason you would have a higher exposure to it than Bitcoin is if you were to invest in a lot of shares of it. But in that case, then maybe you should just buy Bitcoin. I know it is an insecure asset, and if you want to just invest using Wealthsimple or your own portfolio or brokerage, then feel free to use BTCC. Similar to Hive, which is a Bitcoin mining company. They took a huge crash recently because of I'm going to stop screen sharing because I'm not doing anything on Yahoo Finance. So they took a big hit over the speculation bubble, and people thought, well, why is the speculation bubble causing Hive to go down? Well, the reason the speculation bubble is causing Hive to go down is because every time Ethereum would go up, Hive would go up even more. So this would cause a speculative value in Hive. So when we have a speculative value during this speculation bubble, which was the market correction that we've seen in the last 2 weeks, every stock that had inherent value that was based off of futures, which is the competitive edge or the perspectives and the future business that a stock would have. This bubble popped, and all of that extra value that was currently on the price of the stock fell down to what was more a realistic in the moment value for these stocks. So this is where we have the value coming down to earth, because these crypto stocks, they don't follow the exact value of a cryptocurrency. They follow the buys and sells of people trying to trade a stock that's related to cryptocurrency. So don't expect the exact same output and performance from your BTCC as you would your actual Bitcoin holdings. Anyway, so aside from this, we have between iShares and Vanguard. Do you have a preference? When I have a preference, I like to go with Vanguard. If we've got S&P ETFs right here, Vanguard just has, there's no real comparison aside from looking at numbers and what your preferences are. But if I am just looking at the sector weight, this is what I'm looking for. So I don't care whether you are Vanguard, whether you're iShares, whether you're Berkshire Hathaway. What I care for is your diversity and what sectors you are focusing on. Because if look at this one, the sector is weighted in technology by 24%. If that is a recent change, then that could be smart if they're investing in technology on these lows. However, if they were invested in technology 24% right before the speculation bubble that took down a lot of the technology industry, then if I go into this chart, then we will see a fairly decent drop. Yes, and we do. So if we have in the last month, let's see, it's still continuing to go up, but the last 5 days is what's important, because this big crash, well, it's not a crash, it's a correction, it's a bleeding correction where essentially the value is pulled out of stock. So what's happening right now is for the last year, we've had interest rates that were extremely low. Loan forgiveness was incredibly high. So you could start a company and get COVID benefits the moment you started the company. And then the loans that you get are automatically forgiven. And the new loans that you get for your company, you might get 50% off, and you essentially get free money for your company, which will be reflected in your balance sheet, which would be positive and would cause a lot of uptick in your stock. So the problem is, if I have a stock, if I have a business that is getting free money all of the time, regardless of making sales or profit, as well as the pumping of the stimulus into the market, as well as the gigantic flood of retail investors due to GME and GameStop and all of this short squeeze business that has been happening, we have a lot more money in the market that the market does not necessarily know what to do with. And the people who are investing in GME are not necessarily interested in Vanguard or ETFs. So with this speculation bubble that happened, these people who once moved from GME and all of these meme stocks moved into penny stocks, because they have the younger generation has a much more valuable risk asset because they have more understanding of being able to take risks. Most of the investors now are saying, you still want to make 10 to 20% return over the course of a year to 2 years. And that is a good goal to have. However, with the social media push of all of these scammers and Forex markets and all of these people who are convincing people that you can have a Lamborghini in 2 months, it forces them to believe in these discords that pump only entirely penny stocks and all of these things that will get them the future returns immediately. So they would be pumping into these technology stocks, and ARK Invest and Cathie Woods were a culprit for this because they were consistently pumping these smaller stocks. It is not that they were intentionally manipulating the market. However, within the last year, Cathie Woods has become her own pseudo celebrity in a similar vein to Elon Musk. However, she actually has investing experience and people trust her, but her portfolio still took a 25% dive, as did most of the people who were investing in all of the things that ARK Invest was suggesting, or people who invested in ARK Invest in general, as well as anyone who has these general things. Now, I do have a private phone call that is being taken. So what I am seeing here is I have to take this because, of course, I work on call. So I will be pausing my mic. All right, so I just realized that I wasn't screen sharing when I was showing the Vanguard, the ETF here. Whoops. Sharing, screen share screen, application window. We got this. So you're going to see a bunch of doubles here, but now we have, so this company that was 25% invested in stocks took a huge dive from, let's see, 350. Let's zoom out here. Took a huge dive from 350 on the third month and the second day. So the second day of March, and then it took a dive from 350 down to 443, which doesn't seem like a big dive. That's because they are diversified into other holdings. So we have our holdings right here, which say 25% tech, but they still have the energy industry that's only 2.4%, which is a smart move right now simply because of the uncertainty that has happened. We've got basic materials. That's fantastic. That'll cover your mining as well as like construction and that sort of thing. Financial services, very good thing to be in right now. Banks and sorts of things here. I would prefer if this was more heavily into real estate. 2.4 is extremely low for real estate. If you're looking at an ETF right now, you want to have an ETF that is more heavily invested in real estate because of the about to be raised interest rates. People may say that real estate is in a bubble, but right now everyone's trying to eat up the housing market, and there's barely enough houses for sale, and these houses are going for above market prices, or they're adjusting for the possible inflation, and they are making sure that these interest rates that could be coming up. Oh, I'm getting a knock on my door. All right. So I'm going to have to drop out for a quick second because I've given the keys to the person who's supposed to be looking after as the assistant manager here, but they are not responding to their phone, and now I have to go respond to a call. So I'll be back. So I have no way of contacting my assistant, which shouldn't be my assistant. So I have no way of contacting my assistant. I have to go show an apartment. So I will have to get going. Sorry.